Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into ASGN Incorporated's proxy statement. Ever wonder how much say you really have in how a company is run? Let's just say after looking at this report you might be surprised at who's really in charge and how they plan to stay that way. ASGN, for those who don't know, is a big player in IT services and professional staffing. This document is essentially a notice and invitation to their annual meeting, but it's also packed with information on everything from who's on the board to how much the top executives are making and how they want to change that. First off, let's talk about who they want on the board. They're asking shareholders to re-elect 4 directors: Brian Callahan, Theodore Hansen, who is also the CEO, Maria Hawthorne, and Edwin Sheridan. These are the people steering the ship, so knowing who they are and what they bring to the table is pretty important. The document gives a quick bio on each, highlighting their skills and experience. It's also great that they have a board experience matrix, showcasing each director's expertise in areas like IT staffing, consulting, government contracting, and finance. This helps you see where the board's strengths lie and potentially where they might need more expertise. Digging deeper, it's noted that all board members except for the CEO are deemed independent. This is key because independent directors are supposed to objectively oversee management and ensure the company acts in the best interests of the shareholders. Something to keep in mind later when we discuss how they are compensating the company executives. It's also interesting to see that they have stock ownership guidelines for directors and executives, meaning they're required to own a certain amount of company stock. This is intended to further align their interests with those of the shareholders. And just to be clear, there's a policy against hedging or pledging company stock, which means they can't gamble with or borrow against their shares, keeping them truly invested in the company's success. Now let's talk about who owns this company. Big names like BlackRock, Vanguard, and FMR LLC are major stockholders, each holding over 10% of ASGN's common stock. It's important to recognize that these large institutional investors have significant influence on the company's decisions. Moving on to individual ownership, Brian Callahan and Edwin Sheridan, both founders of Apex Systems, have substantial holdings, while CEO Theodore Hansen also has a significant stake. This kind of ownership can say a lot about where the priorities of the leaders lie. The Compensation Committee chair writes a letter to stockholders outlining how ASGN is supposedly doing and states that our executives are incentivized to achieve strong top and bottom line growth. We will have to see if the numbers back that up, so keep it in mind for later. The letter also stresses their commitment to tying pay to performance, and that's always something you want to confirm when looking at a company. ASGN says they're focused on high-value IT consulting solutions, which is supposedly led to increased margins. They also highlight their growing IT consulting revenues and how they're adapting to the IT industry's demands, which, if true, could definitely drive long-term growth. It's also worth noting that the bonus structure has both financial and individual objectives. Financial targets are tied to profitability and revenue growth, while individual goals are more about personal performance. It's good to see both types of goals being incentivized. Let's get to the numbers now. This is how the executives are making their money. In 2024, for example, CEO Theodore Hansen took home over $1,000 in salary with almost double that in cash bonus. His total compensation is $8.3 million. In general, for each position, the actual bonus paid was less than target, which suggests that, at least for 2024, goals were not achieved. Salaries did increase a bit from the prior year across the board, but honestly, only by about 2%. It's interesting to see that the bulk of their compensation is in equity and bonuses, which are supposedly tied to performance. But here's where things get interesting: adjusted EBITDA, earnings before interest, taxes, depreciation, and amortization, one of their key performance metrics. Missed target came in at 12%. Revenue is similar, which is a bad sign for future earnings. I mean, the company did not deliver, and yet the compensation was still solid. So the question is how? Well, if you look at individual performance metrics, the execs did great, but again, there seems to be some inflation. Strategic plan execution. Excellent. Enterprise risk implementation. Excellent, you get the point, but the numbers speak volumes. At the end, they are all making a very nice income, so who are we to judge them? Equity also plays a big role with performance-based stock units or PSUs, making up a significant portion of the compensation. These PSUs vest based on things like ANOPAT growth over a 3-year period, with a potential boost or cut depending on how the company's stock performs compared to its peers. This is a great metric to check for the future, since there seems to be little relation between the stock or no part and compensation this year. One thing I love to see in these reports is the CEO pay ratio. This shows how much the CEO makes compared to the median employee. For ASGN, the CEO makes about 121 times more than the typical employee. That number feels high, but I don't want to judge without fully understanding the details of who their average worker is. The company itself made it clear that there was a disparity in employment time and suggests the ratio would be about 86.1, which is my employment time, and suggests the ratio would be about 86.1, which is reasonable and much closer to average. Deloitte Touche is ASGN's accounting firm. I'm seeing 3.8 million in accounting fees, which is a lot. Is it a red flag? Not necessarily. It depends on how many assets and what the audit requires to achieve. This would have to be compared to other similar companies in the same situation. And now some housekeeping stuff. They also want more shares available for their incentive plan. They need 3.5 million more shares because they seem to be running out of shares, or so they suggest. It's important to note they only have 300k shares remaining before and are asking for a vote to add 3.5 million additional shares to that number. This is where you can voice your opinion. It's good to see specific qualifications considered, like familiarity and or experience with general issues affecting our business and diversity in perspective and background. These types of factors ensure that the board thinks about everything, which we have to rely on since the metrics seem to indicate that it's not all about business. Next is a proposal to add shares to their employee stock purchase plan. If you think it's good that the employees are also owners, then vote yes for this proposal. Finally, shareholders are asked to ratify the appointment of Deloitte and Touche as their independent accounting firm. It's more of a formality, and it is very unlikely that an accounting firm will be replaced. Looking at ASGN overall, I'd say they're in a pretty interesting spot. On the one hand, they're highlighting their focus on high-value IT consulting and how they're adapting to the evolving tech landscape. They're also trying to balance it with the need to give solid compensation to executive team members. I'm not sure I am a fan of not meeting key performance indicators and still being paid a lot, though I recognize this might not be a bad company for its size. The share dilutions as well are not extremely high for a company of that size, and as long as the employees also benefit, it seems like a plus to the business. Overall, I would say that's mostly a positive. I would keep a close eye on their key performance indicators to see how the PSUs are paying out. And that's where the opportunity would be to take advantage of the opportunity or potential decline of this specific business. That said, ASGN appears to be navigating a dynamic industry, and it will be interesting to see if they can turn this into a sustainable competitive edge. Thanks for watching. Don't forget to like, comment, and subscribe for more corporate deep dives.